In this video, I'm going to teach you how you can read a technical price chart bar or candle by candle. So bar by bar, as Al Brooks would say, or candle by candle. Guys, my name is R Trades. I'm an amateur day trader and full-time licensed attorney here in the state of Texas. And so if you happen to commit any crimes in my local area, please let me know. I will get you out of jail. Not an advertisement. I'm kidding. All right, guys. So with that being said, I am an attorney in Texas. I'm not allowed to advertise like that. With that being said, let's go through how you can analyze a price chart bar by bar. Okay, guys. So in my opinion, the best way to technically analyze a price chart is candle by candle. So what I've done in this example here on the micro NASDAQ is I've taken us down to the regular trading hours here on the bottom right of the screen. And what this does is it's only going to show you the price action from 0930 New York local time when the stock market opens. So this was Wednesday. It's going to take you up to Wednesday at 1610 or 1600. That is when the stock market closes. In other words, it's only going to show you when the stock market is open. Now, the futures market is open 23 hours, 5 days a week. And certainly there's a lot more to discuss here than only the regular trading hours. But the market mostly moves in the regular trading hours. The candles are easier to see. And using a 15-minute chart on TradingView, every full trading day, you're going to have 26 bars. Okay, so 26 bars to look at. So that's why I'm using the regular trading hours, just for ease and convenience. Okay, guys, when analyzing a chart bar by bar, the very first item you need to look at of the 5 that I have mentioned here is you need to look at the context. So what do I mean by context? Well, look to the left. So we're starting here with the opening 15-minute candle, arguably along with the closing candle, the most important 15-minute candle. And guys, I've used the 15-minute chart here for ease of use and for convenience. You can analyze a price chart bar by bar, really whether on any time frame. I'm just choosing to use the 15-minute chart for ease and convenience. So the first item you want to look at is context. What do I mean by context? Well, number one, where is this candle in relation to the left? Where is it in relation to prior price action? Are we trading near a prior high or a prior low? Are we trading within the middle of a prior trading range? Has the market been in this price area recently? That's what I mean by context. But I also mean by context, what time of the day is it? Are we at market open? Are we at market close? Are we during the lunch hour? That's from that 12 p.m. New York local time to 1:30 p.m. New York local time. What is the context? Is there news today? During that 15-minute, was there a news event? You're especially going to see that an hour before the stock market opens is when a lot of economic data comes out. So that 15-minute candles always can tend to be pretty interesting. So guys, context is not just where that candle is in relation to price action to the left. The context is also what day of the week is it. Guys, what month of the year is it? Is there a seasonal tendency? So for example, if we are on crude oil, or we're on gold, or we're on an agriculture, guys, natural gas, for example, is it hot outside? Are there hot weather patterns in the United States? Crude oil, has there been U.S. crude inventory news that comes out? So context even goes beyond the chart and where is that bar in relation to the prior price action. It also goes on to what time of the day is it? You know, what day of the week is it? Is it Monday where the market tends to like to be in a trading range? Or is it Tuesday, Wednesday, Thursday when you can have some big trending moves? Those are the questions that you need to ask yourself, guys. So it's not just about where the candle is in relation to the prior price action. Now, guys, what also goes into reading a candle is, a lot of different things. Item number 2, the size, the shape, and the time. Okay, so when I'm looking at a candle, I want to know, all right, what is the range of that candle? So using the drawing tool on the left or the measure tool, I'm going to use that from high to low on that opening candle. That's a 46-point candle. If I go down to that same time period here on the average true range, what is the average range of a candle? Is that candle that we're looking at in that 15-minute period, is it larger or is it smaller than the average true range? So is volatility increasing or is volatility decreasing in that 15-minute period? So what is the size of that candle, and what is the size of that candle in relation to our recent candles, which, guys, again, you can find out that information by using the average true range. Number two, what is the shape of the candle? Do we have long wicks? Meaning, is that candle, that 15 minutes, did the market close near that candle's low or near that candle's high, which can be an indication of momentum? Or is, like in this 15-minute example, is the candle what we refer to as a spinning top candle? Is the candle largely indecisive? Okay, so to recap where we're moving forward bar by bar, the first thing I want to know is I want to know context. That candle that I'm looking at price action to the left. Are we near recent highs? Are we near recent lows? Are we in the middle of a trading range? That's some of the context I want to know. Item number two, I want to know the candle size. Is that candle a larger or smaller candle than average, which could go on to whether the market is moving strongly or not so strongly. Again, that goes into volatility. And then item number three, I want to know what time of the day is it. Are we in the morning session? Are we in the lunch session? Are we in the afternoon session? Or are we in the overnight session, the Asian session, London session, in the New York pre-market? What time of the day is it? Not only do I want to know what time of the day is it, what day of the week is it? Is it Monday? Is it Friday, when the market tends to be relatively, especially Sunday night and into Monday, as usually Mondays are trading ranges, not always, but the stock market does not tend to trend strongly on Monday. It tends to trend strongly when there's economic news, so like a Thursday or a Friday, usually, but not always, but usually. And then, are there any seasonal tendencies that we need to look for? Is it the summer when the markets tend to be slower? Or are we coming into October, November, December when the markets tend to pick up in volatility? What has volatility looked like recently? Guys, a lot goes into context. You can even, if you're looking at the NASDAQ as compared to the ES, has the NASDAQ made a new high while the ES has not? That's called SMT, or smart money technique divergence. So are there two instruments that you can compare against one another? That's more context, okay? All right, so number three, I like to talk about ICT concepts, okay? Not everybody does, but I'm an ICT guy. I want to know about that candle. Is that candle a part of a fair value gap? Does that candle have a long wick inefficiency? I want to know, when I'm looking at that candle, does it form an inefficiency? Does it play a role in an inverted fair value gap? Is it a part of a model 2022? I want to know that. So looking at that candle in relation to the nearby candles, is that a part of a model 2022? Has that candle, so for example, did that candle make a new short-term low or short-term high? So looking at this candle as an example, I want to know from an ICT perspective, did we break into buy-side or sell-side liquidity? In other words, have we formed a new high or a new low on a short-term basis? Why do I want to know that information? Well, number one, if the market's going to continue to move in that direction, I want to know if I can draw a standard deviation or a measured move. What does a measured move look like? Number two, I want to get an idea of, hey, maybe the market might turtle soup. It might reject that new low. So again, that's more information that I want to know as we're reading bar by bar. Number four, traditional candle analysis. Now, am I the biggest fan of traditional candle analysis? No. But what does some traditional candle analysis look like? Is the candle a spinning top candle? Is it a Mary Bozu candle? Is it a doji candle? Is it a part of an evening star, morning star, morning cloud cover, any one of the number of candle patterns? I want to know if that 15-minute candle closed above the prior recent candles, below the prior recent candles. I really want to know, in relation to that same 15-minute candle, where did the market close? Did it close right? Did it close above that 15 minutes 50% point? Did it close below? And where did it close in relation to the last candle? That's traditional candle analysis. The shape of the candle, the size of the candle, and the context of where that candle closed in relation to the prior candles. That's traditional candle analysis. like for example, we take this candle here, the 1545 candle. That candle is going to be an inverted hammer candle. Traditionally, that closed above the 50%, below the 50% of that candle's range. And then notice that was in context, the second push higher above the 1445 candle. So again, context is always mattering, even when you're just looking at traditional candle analysis. Now guys, I'm not saying that traditional Japanese candle analysis is in and of itself effective. It has to go with all the other things that I'm talking about, which is context. And then number 5, guys, look, there are, as you day trade longer and longer, so let's say that you're 6 months, you're 1 year, you're 2 years, or you're 2 years plus into regularly day trading, regularly studying price charts, you're going to get a feel. You're just going to get what's called a discretionary feel for where you think the market is likely to go. That is going to go into it. So personal feel. The other, item that some of the other items reading the price chart bar by bar is this the market's first push up, or is it the second push up? First push down, second push down. So like for example, here, I want to draw your attention to where the cursor is on my screen. Notice that this first inverted candle was really the first time on a 15-minute basis, the 1445 candle, the first time that the market thought about losing momentum, potentially reversing. It ended up reversing on the second push-up. That's something that the market tends to do. It is pretty common for the market to make a high, pull back, make a second high, including a higher high, and then go lower. Sometimes it'll even form a triple top or a quadruple top. But usually the market likes to do things twice. Not always, but twice. Okay, guys, so that's something that you got to get used to. So reading a price chart candle by candle, I just want to go through now an example. And what I'm going to do is go to let's go to something other than the micro NASDAQ and show you how this would work. Let's go to crude oil. Okay, so we're on crude oil, and I want to show you an example of technical analysis on something other than a stock index. So we're going to go from Thursday, then I might go back to the ES. Thursday at 9:30 to Thursday at 10 o'clock, and we're going to go through the crude oil 26 bars, guys. Okay, so the market opens at 09:30. That first candle, what is the first thing that I'm looking for? Number one, notice there's a regular trading hours gap. First candle on Thursday, the 11th of July in crude oil, what do we notice? Yep, we're just running below a prior recent low and a prior low here. That's the context that I want to look for. Now, where did that candle close in relation to itself? The candle closed well above the 50% point. So we take the range of that candle into quarters. Notice that the close is at 81.80. Okay, so the market closed in the top, that candle closed in the top quartile of the candle's range. And notice, guys, all right, what else? What else do we want to notice? That candle is 23 ticks large, or 23 cents. The average true range at that point was about 24 cents. So it was about an average-sized candle. Okay, average-sized candle at the market open that just ran on sell-side liquidity. And look at that long wick, or this is basically a spinning top candle, but it closed in the upper half of that candle, which is going to give you an indication that the market is probably going to rally. Second candle, bar by bar. We're going to do 26 of these on crude oil. And guys, this is what you have to do. If you want to be a successful day trader, you need to get used to tedious work. I mean, you're going to have to put in real work. I know I've already lost the vast majority of the viewers. If you're still out there and you're still watching this video, you're putting in the right work, guys. So I'd recommend taking notes, frankly, watching this video back. All right, second candle. What's the first thing we notice? Well, we close above the first candle. We close back into the prior range where the market was here. Notice that we closed above the 50% point of the prior candle. So again, strong idea. Also notice, guys, higher low than the prior candle. Basic trend analysis. Are we making higher lows or not? That's basic Basic trend analysis. So the second candle, notice that the low is higher than the prior candle. Notice that we closed above the prior 15-minute candle. Notice that we closed at 81.96, which is above that 50% point of the candle's range. And notice that in context, that's after the market ran on sell-side liquidity. Third candle. What are we starting to pick up on here? Well, market looks like it's constricting in its volatility. That's basic candle analysis. Long wicked candle, so the market's a little bit indecisive here. Looks like the market might want to have that second little test down. Candle number 4, we get that second little test down. But again, notice, higher low. This is what's called an inside candle. Whenever you have an inside candle, you have a contraction in volatility, making it likely that you're about to have an expansion in volatility. So when volatility contracts, you expect that volatility is about to expand. When volatility expands, you expect that the volatility is about to contract. Quick break. As you read price charts bar by bar, you're going to get better at it. You're going to see things that other people don't see. They're going to give you insights into things that other people are not seeing. I have watched videos by a YouTuber named iManTrading. I like iManTrading, but I don't agree with his analysis that reading a price chart has no predictive value. I think it has plenty of predictive value, especially when you're using non-chart context, like you're reading your fundamentals, you're reading your news, you're keeping up with the market squawk. Guys, I don't agree with iManTrading. I don't believe that the markets are completely random. I don't believe that you cannot more often than not get a feel for where the market is about to go by tediously analyzing where the market has been. Now, that is not to say that past performance is indicative of future results. It's not. I'm not telling you that this is a panacea, anything like that. Not financial advice. But I don't agree with iManTrading, frankly. Okay, so now we're 4 candles in. 5th candle in, we have what's called an expansion bar. So we get a big expansion in volatility, and we close above. Look at this. Close above. What's our context? Closing above some prior price action. Guys, the market likes to run on prior highs and prior lows. So when you get to this candle, when you close here at 82.5, so we close at 82.50, you have a strong indication that the market is wanting to run where? Where does it want to go? In my, when you're looking at the 1030 candle. Yeah, guys, it wants to run above that prior high. Very, very easy to see, okay? It wants to run above that prior high. Does that mean it's always going to run above that prior high? No, but you have a good idea of where the market wants to go. Also, notice that this candle is 75 cents, where the average true range, it's 2 times the average range candle. So that 1030 candle, the average true range was 30 cents. That candle was over double that. So after you have such a large candle like that, what are you expecting the next 15 minutes to trade like? Probably a small candle. You don't typically get 2 ATR candle and then immediately get another 2 ATR candle. That's not typical. Okay, guys, 3rd candle. What are we looking for? We're looking for context. We closed above the prior candle. We're near a short-term high. All right, we're at this point, we're now at about 3 ATR moving higher. Notice that we closed above the 50% of that candle's range, but notice that that candle has a very small range, especially in comparison to the last candle. Also, look at the separation between the 1030 candle and then what's coming up on the 1015 candle and the 1030 candle. What is that? It's an ICT fair value gap. Okay, next candle, and we're gonna go through these a little bit quicker. Context. We're above multiple short-term highs. Now notice that the market thought about turning around. So look at how we dipped into that fair value gap and then it went higher. That's basically, guys, a lot of traders, I guarantee you, in crude oil got confused on that move. Okay. Second candle, the 1130 candle. What do we notice about our context? We're still in the AM session, but notice that we closed within the range of the prior candle. So what are we seeing here? That's right. a constriction in volatility. So what do we expect after the market constricts its volatility or makes a triangle like this? Yeah, we expect an expansion of volatility. That's correct. That's what we expect. Next candle, we close below the 50% point of the prior candle, but we're still sitting up above right around prior highs. But what does that context tell you? Well, the market might be struggling to keep its new high, right? If the market breaks above a prior high, just dips above it, and is struggling to stay above, well, you could have what's called a failure or rejection or turtle soup. Next candle, we see a large spinning top candle that closes near its low that, again, tries to break out higher, fails to do so. So we probably have resistance up here. That's what you're seeing in the market. This crude oil market was thinking about moving higher, but it just didn't have the energy or the ability to do that. And so what do we have? Resistance. Next candle. What do we notice the very first thing? We're in the lunch session now. Between 1200 and 1330, we are in the New York lunch session. Okay? This candle, again, fails to break higher, so what are we going to do? Well, we're probably about to break lower. Next candle, notice that we did not close below the prior four candles, so we get our first black candle in a while, first indication of some market weakness. In that particular 15 minutes, I want to see the range of that candle. Notice that we closed right at about the 50% point, so not a very strong move downwards, but just sort of a dip downwards. Next candle, we get a candle that is within an ICT fair value gap, so I'm going to draw that out. Excuse me for just a moment, guys. I'm deleting some of our old drawings here. What candle are we looking at now? We're looking at the 1230 candle. So what is the time? New York lunch session. Also, guys, when you're trading crude oil, what time does spot crude oil stop trading? This is something that you need to know. Spot crude oil stops trading an hour and a half, or 1330. It stops trading an hour and a half before the other. It closes when the commodities close. It doesn't close when the indexes close. Something that you need to know if you're trading crude oil. Okay, so what do we look at here when we see the 1230 candle? Well, from an ICT perspective, what are we closing in? Closing in a fair value gap, guys. That's something to notice. From a traditional candle analysis perspective, what is the length of this candle? 37 cents. What is the average true range at that point? 29 cents. So a slightly above average candle, closing near the low, closing within an ICT fair value gap during the New York lunch session. Now, unless there is a news catalyst, and sometimes there are news catalysts, but unless there is a news catalyst, do we typically expect for the market to reverse completely? As in, you have an up day and then it reverses completely to a down day if you don't have a news catalyst? The answer is no. The market tends to move directionally unless you get a news catalyst. So, looking at the 1130 candle, which is what I have highlighted, we're thinking, okay, some market weakness now, but we're coming back into the opening range. Also, guys, notice we're coming into an ICT order block. So what is that? That candle's coming into the ICT order block here, if you know about ICT order blocks. Okay, let's move on to the 1245 candle, guys. We're going to move on to the 1245 candle. I want to know context. Third candle down and what has otherwise been an up day. Also, notice that we're coming into the ICT order block here, trading below the ICT fair value gap, or what would be a range bar. In other words, guys, let's say that you're using a volume profile. All right, so you don't like ICT. You don't like the concepts that I'm talking about, but you use the volume profile. Okay, what is going to be this right here? That's going to be a high volume node, right? That is absolutely going to be a high volume node. Point of control was probably down here or it's up here. But in any event, we're coming down to a high volume node, right? Or a trading range. When the market exits a trading range, and it goes back into a trading range. If there's not a news catalyst, what is the market likely to do? It's likely to find support there, move back in the original direction, and that is exactly what we saw play out here. So that's what we see on the 1245 candle. Also, let's see where that candle closed in relation to its body. Closed at the 25% point in relation to its body. All right, and that was the 1245 candle. Now we're going to move on to the Now we're going to move on to the 1300 candle. Okay, guys, first thing I want to notice is context. So let's see, what is the range of this candle? That candle moved 53 cents. What was the average true range for crude oil candles at that time? 30 cents. So we basically almost have a 2 ATR candle that completely reverses. It closes well above the prior two 15-minute candles, and it closes above the 50% point back into that upper range. Or if you're using a volume profile, this is going to go from a high volume node back up to high volume node. Using ICT concepts, if we get a candle like the 1300 candle, what high are we probably about to run on? Yeah, right there, that 1100 candle high, we're probably running on that, right? So, guys, once you get that 1300 candle, you know that the market is probably just going to trade higher for the end of the day, knowing that crude oil, spot crude oil, closes an hour and a half before the stock indexes. You know you're probably just going to drift higher for the remainder of the day. Okay, now let's look at the 1315 candle. Spinning top, indecisive candle within the trading range of the prior candle. But notice, guys, just as long as you already have an upward bias on crude oil at this point for the day, just because the 1315 candle is a black candle does not mean that the market is going to reverse and go straight back down. In fact, it probably won't. Notice here, 1315 candle, what's our context? What is that from an ICT perspective? That's a balanced fair value gap, but it's also part of a balanced price range, isn't it? We have a sell-side imbalance, buy-side inefficiency. Across from it, a BISI. That's a balanced price range, and the market just barely dips into that, right? So, anyways, balanced price range there as far as I can tell. 1330 candle, what do we get? We get a hammer candle that closes right at the top of the candle, and we're approaching that prior high at 82.77. Close here was at 82.59. So you have 18 cents that you're pretty confident the market's going to move there. 1345 candle, small upward hammer candle, closes above all of this prior price action. So again, no sign that crude oil wants to slow down. Same thing on the 1400 candle. Now we have 3 green candles in a row. So no indication that the market is slowing down from the 1400 candle. Now, this is an interesting candle here at 1415. What do we immediately notice in the context? That's right, we're running above 2 prior highs. So guys, if you were using a tool like a book map or a heat map, what do we see here? Well, the market breached above prior highs, and guys, what is going to be sitting above these prior highs? Yeah, that's right, a whole bunch of orders. A whole bunch of orders, sell limit orders, would be sitting above the 1100 high and would be sitting above that Wednesday, 10th of July, 1145 high. So we have 2 prior highs that certainly would have had sell orders sitting above. So what happened when the market dipped above that prior high? A whole bunch of sell orders got triggered. And that's why the market slipped back down very quickly. Because again, as the market reached and ticked above into 82.78, what got triggered? Stop, sell orders, right? Where do people put their stops? Where do they put their sell orders? Above prior highs, below prior lows. So when that market got there, what happened? Sell. Right? Okay. But notice that as soon as the crude oil market came back down, what did the market do? Well, it rallied again. 1415 candle. when the market breached above that prior high, sell, 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 sell. What happened? The market came back down, immediately bought up again, continuing to show you that sign of strength. 1430 candle. Notice that we close above all of those prior candles, and now it looks like we're going to break above those prior highs. So if you believe that the market is going to break above the prior highs, what tool should you be using? That's right, guys, a measured move, a measured move. So we take a measured move of our last identifiable swing. So as we get that 1430 candle, I'm taking our last identifiable swing and I'm projecting it out higher. Notice right around that one measured move higher, that is in fact where the market ended up turning. So, going to move on here, guys. It's basically the same deal for the 1445 candle. Where you might have a little bit of hesitation, the 1500 candle, notice that it's a small black candle, which indicates sort of a slowing in momentum, a constriction in volatility. I would say, though, that the 1515 candle is nothing to worry about. 1530 candle, we again make a new high, close above our prior 4 candles, again indicating that we're moving higher. All right, guys, so in this video, I demonstrated to you using a crude oil chart, but starting with the micro NASDAQ, how you can read a price chart bar by bar. Now, guys, I also want to encourage you. I have a video called Analyzing the MES Bar by Bar for Friday, July the 12th, 2024. I encourage you to go and watch that video. Guys, I personally trade the micro ES using a personal account. That's what I do. I don't trade a prop firm account at this time. But if you are interested in using a prop firm account, please make sure to use my affiliate link in the description box below. This is how I analyze a price chart, guys. This is how I do it. And so when I think moving forward, when I make a recap video, this is exactly how I'm going to review the MES for the day. And then I might briefly talk about, some of the things I saw for the NQ. Okay, guys, this has been Our Trades, back with another video. I want to thank you for joining me. This was how to read a price chart bar by bar.